Before we jump in and talk about STEM, I
Yeah,
know that you're not a founder. You came in as the CEO a number of years ago. So maybe just real quick, talk to us about your background and why you joined the company.
absolutely. I was previously in the solar business. Well, actually 16 years at GE, if we go back a little more. And then I was recruited by John Doerr after we sold our business and GE. And then actually, let me step back. I moved from GE to First Solar, was there a couple of years, took that from about 250 to 2 billion. And then John Doerr called and recruited me over to run a company in their portfolio called Mia Soleil as a CEO. Did that, sold the company, which was really the objective. And at that time, one of the board members who actually became the CEO of HP had introduced me to Angelino, our largest shareholder of STEM. Talked to them about a board slot, and one thing led to another, and ended up joining the company as CEO in December of 2013.
Oh, wow. Okay. Yeah, that was a while ago. I assume STEM raised a bunch of capital. I mean, I know the answer, but they raised a bunch of money from private investors before coming public, correct?
That's right. We have a tremendous crew of investors that got us here, and quite frankly, are excited to stay with us going forward. They've all rolled their positions into this deal, and that includes the likes in the U.S. of Constellation. We have, a variety of VCs like Mithril, Activate Capital, Angelino, I referenced earlier. Over in Europe, we have RWE, Iberdrola, and Total. In Asia, we have Mitsui and Temasek. So really a global scope of investors that are there to help us grow and highly incentivized to do so. And they've got significant amount of projects and things that we could put our product into as well.
And I know you've talked about the reason you came public was to get all of that cash onto the balance sheet to help fuel your growth going forward, and then also help you work out better contracts with your hardware suppliers, correct?
Yeah, that's right. I mean, really, it was interesting. The genesis was we grew so quickly and we're very successful at building out what we expected to do, which was a big software platform and gather a lot of hardware customers along the way. When we started this, Jonah, there was not a configuration of hardware that would work for this. So we had to build out the inverters with a partner. We had to put batteries in racks that looked like a gym locker. So the early days, as we began to get more and more successful, it became clear our balance sheet was a constraint. So and that was constrained in a couple areas. When you look at large project owners, and there are a lot of those when you think about the Goldman Sachs's, Blackstone, BlackRock's, they have a big solar portfolio that they want to put storage on. And when we have a 12 to 18 month runway as a venture-backed company, it didn't exactly exude confidence for them. So that was one of the big drivers. And also we wanted to do more geographic expansion. We knew our terms were asymmetrical because of our balance sheet with suppliers. That's all changing. So yeah, I mean, you've hit on it. And again, look, this now gives us a chance to look at some tuck-in acquisitions to accelerate our software roadmap as well.
So let's kind of start back at the beginning then. Tell us about STEM. If someone watching this video or interview has never heard of STEM before, how would you break it down for them?
Yeah, so look, I mean, we're the market leader in AI-driven storage solutions, and we enable rapid adoption of renewables onto the electricity grid. And we provide our customers a complete clean energy storage solution that includes integrated battery hardware and battery optimization from our proprietary software platform that we call Athena. And with this integrated system, we deliver value to our customers by reducing their energy costs, reducing carbon emissions, and help stabilize the grid. Our customers include commercial, industrial, or what we call C&I, think in terms of like a Fortune 500, utilities, and then as I mentioned a moment ago, these renewable asset owners or renewable developers. And just from a customer perspective, Jonah, we save customers on the C&I side up to about 30% a month on their energy bill. And we also provide the grid an opportunity to use that energy to help with intermittency and constraints that are going on. So these customer sites actually act as virtual power plants that can be called upon by the utility or grid operator. So that's a big value, and it's becoming very material for utilities to address areas of constraint with storage at these host customers. And our Athena platform orchestrates all of that behavior. Then if you go over to the renewable developer side, it's a similar story. Athena is operating the storage device. Remember, these are large battery storage devices made by Tesla, Samsung, or LG as an example. They are big dumb batteries without the energy super intelligence of Athena. So with that operating system on top, we can execute on a variety of things. And so on the developer side, we help them participate in different market options and monetize those. And we see anywhere from 10 to 30% enhanced IRRs with that customer base. So really interesting and compelling savings for our customers, or ability to leverage up their financials. Additionally, the opportunity for the C&I side, at least the Fortune 500, to really have a nice ESG narrative, which is important because they're now participating in the grid. They're becoming a better grid citizen, as we've heard many of them say, and they're actually drawing revenue from those services that we're providing to the grid to help stabilize the grid.
Now, I know you guys recently reported Q2 earnings, came in at about 19 million, which was essentially the estimates. And then you confirm guidance for the full year at 147. And then you talk about the contracted backlog of 250 million. Is that backlog, are these brand new projects, or are these projects like the one in California where the hardware was already in place, but it was not performing up to expectations, and then you guys come in with your software and basically take over?
Right. So to answer your question, absolutely new contracts. Now, they may not be new customers, which is a great thing. In other words, we might be contracting more Home Depot sites, additional Facebook campuses, or Amazon locations. But yes, they're new contracts. And all of our hardware that we contract includes the Athena platform. It's a 100% attach rate. The reference you made about the electrodes portfolio, as it's called, in Southern California is a great story, actually. And it's a real attribute to Athena. And it's one where we replaced the existing software that was on that platform. It was 350 megawatt hours at 85 sites. We did that in about 60 days. And the performance is enhanced by 30%, as we reported in a recent press release. So the new financial owners of that are elated with Athena's performance. And it's a real attribute to what we can do in displacing existing software platforms on storage assets around the world.
What do you think is the bigger opportunity going forward? Is it these new projects like the ones that you guys have going on in Massachusetts, or is it replacing the previous software providers on some of these hardware systems?
Yeah, the new market expansion is bigger. I mean, we're still, second, third inning, quite frankly, of this industry. Now, it's industry that's a $1.2 trillion TAM that's growing at 25 times over the next 10 years. So it's a massive and growing market. But I would say that we're expecting to grow into new markets more than displace software platforms that are out there. In the long run, although our model through 2026 still contemplates hardware, in the long run, our view is that STEM would be the operating system for all of these various energy storage devices globally. And that's something that we'll do longer term. But today, our customers want the fully wrapped solution that we can provide.
And just so people are aware, the gross margins on the software is 4 times higher than the hardware, right? Around 75 or 80%.
Yeah, we talk in terms of the hardware margin to be in the 10 to 30% range, software at 80%. And then the other kicker that we have is this market participation, whereby we can take that asset with Athena and actually bid into the markets. And that's even higher than 80% margin, because that's just putting another app onto that storage device, helping draw more revenue to that customer that we share in from either the utility or the grid operator. So that's the longer game. We've put a little bit of market participation in the out years of our plan, but we're generating dollars from that today.
Now, about 6 months ago, it seemed like you guys were doing most of your work in California. Now it seems like you have projects happening in Massachusetts. And then I read last week the press release that you guys are taking over a project in Brooklyn, which is exciting. I mean, East Coast expansion is obviously a big opportunity. Can you add any light to those, those two situations?
Yeah, I mean, look, I would say that from a California standpoint, we are the market leader, and it's really due to the fact that this is where the storage industry started. We are We have 75% market share in the California market. When you look at that, we are larger than our next 4 competitors combined. So very good traction here. But from a market standpoint, longer term, yeah, we see a lot of activity in New York. We see a lot of activity in Massachusetts, and we are looking at some global opportunities as well. So the market's really booming, quite frankly. And now we've got this federal ITC on standalone storage, which we believe will occur. Wood Mackenzie says that's a 25% increase in TAM. You saw the first infrastructure bill get completed, and so we expect in the next round that the storage ITC will be a part of that. So really global opportunity, a lot going on here in the U.S., and really the best days are ahead. But you see it in the plan. I mean, our CAGRs are significant. The market's growing at about 50% globally in the markets we play. So it's just a tremendous amount of opportunity out there.
Now, I know you talk about C&I being a big opportunity. Is government or municipality doing anything yet?
Yeah, it's a great question. So the munis are really catching on. We talked a little bit about this in the earnings call. We're actually participating in 26 new states, specifically around co-ops and munis. And so that's an area that we're spending more resources around. We have a very interesting commercial model, go to market model, whereby we have a large base of partners, and in the direct side, we'll have 650 partners that are out calling on customers on our behalf. We train them through STEM University, we call it, an online platform. And then on the distributor side, these solar distributors, they're out as well, and there's 5,000 of them. So we have a huge network out selling our product, and we think that that's really a great way to go to market and capture all these different size customers. The enterprise side, we do direct, Jonah, and those are your large Fortune 500, we still handle those. But really compelling opportunity. We announced something at Ozarks with a co-op, and we expect to see more tailwinds around that space as well this year and beyond.
Can you help explain the difference between front of the meter and behind the meter? I know those are terms that get confusing for some people.
Yeah, it's actually blending together quite a bit. But think of front of the meter as more large scale, at the utility substation or utility owned, or a large solar plant that is combined with storage. Behind the meter typically would be at the customer site. So think Home Depot as an example, at their location outside. But that's what's considered behind the meter. And as I said, I think if Lars Johnson, my CTO, were on, he'd say, hey, throw all that out. It's all blending into one when you start to talk about different types of grids. So it's just the way the industry has been segmented, and a lot of the analysts segment it in that form as well.
Now, I know we talk a lot about solar, but is wind also part of this?
It is, and we're looking at a variety of wind opportunities. We've not focused on it to date. Now with the new balance sheet, we have more firepower to go do that. So we'll definitely be looking at that space more.
Okay. And then you talked about international growth briefly. I know in either the investor presentation or maybe one of the earnings calls, you talked about some international opportunities. Are you guys going to do that through some of these resellers or distribution partners?
Yeah, actually, the one of the better opportunities that we see is in South America, and our partner there and investor is Copec. So it's a great example of some things we're doing with them to help us grow in Chile, as an example. Japan, we have systems over there, and Mitsui was an investor that helped us get into that market. So we'll really work with our previous investors to help us grow into those markets. And as I said, they have influence, they have customers, and they have deep domain experience in those markets. So we really are fortunate to kind of be starting on third base, if you will, with these existing investors that have been with us for several years. So we expect to do more internationally.
Now, when I posted a couple days ago on Zoom that we we're going to be doing this interview and that people could watch live if they wanted to, I also gave them a chance to ask some questions. And I always get do they work with Tesla? Do they compete against Tesla? Is Tesla going to acquire them? So I know you've talked about some, LG and Samsung are 2 other partners. Are those the only 3 hardware partners you guys work with, or are there others as well?
No, there are others, and we can put Athena and have on any tier one global OEM, we've put that on top of it. So we're in good shape there. One thing that we are seeing, some of those names that you mentioned are NMC based technology, and there's another technology called LFP within lithium ion that is better for solar plus storage. It's a 20-25 year product. Tesla announced that they were going to be doing something in that going forward, but that's why we go beyond LG, Samsung, and Tesla. So we have a variety of suppliers. Most importantly, we can put Athena on top of all of them. With regards to Tesla, look, we're their largest behind the meter customer. So we have a good working relationship with them. And, you know, where I think people talk about competing with them are on very large projects, and we're just not doing those today. You know, we're not chasing 100 megawatt storage projects in Australia, and you know, Tesla can have those all day. So that's just not in our zone.
Okay. Are you guys seeing any supply chain problems on the hardware side?
You know, we've locked down all of our 2021 supply. We've been pretty thoughtful, I would say, Jonah, around this. We've got a very seasoned supply chain team, and we do an annual request for proposal or request for pricing to a variety of suppliers. And it's an extensive process. It's over 35 questions. So we start to understand their capacity, where they have sites, excuse me, their roadmap on energy density, cost roadmap, et cetera. And we'll typically select 3 of those, and have been doing that for several years. It's resulted in double-digit cost declines as well. And I would say that the supply chain for 2021 is locked down. 2022, with the bookings progress that we have, is starting to get more visibility. So we're working that now. I think the difference we're seeing is that the suppliers would like longer-term commitments, whereas before you could kind of get away with a 3-month forecast. Now they're saying, hey, look, we really need to understand your entire 2022, or at least half of 2022. So if you can bring that, that's helpful. And with our balance sheet, we can be more creative to say, look, we'll engage in more take or pay type terms, but we want better pricing, and we're getting a receptive audience around that.
What's the sales cycle like? You know, when we see a press release that you guys are taking over a project after you won the RFP process, or you're working with this big developer in Massachusetts, I mean, is it 12 months, 24 months? I mean, it's got to be long, right?
Yeah, it's 6 to 12 months. It depends. The large FTM projects can be longer. I mean, as you imagine, these front of the meter projects, so these solar plus storage developer type projects, they require permitting. There's a lot of land involved. So yeah, they can take long, but I think the key metric to think about is our 12-month pipeline, and that continues to grow. You know, that's $1.7 billion at the end of June, and that's 21% up from the end of the first quarter of 2021. So that's kind of your good forward-looking metric, and it continues to accelerate.
Any thoughts on what percentage of that might close in the next couple of years?
You know, we don't really divulge the exact numbers. I mean, I think when you think about kind of typical close rates in the 10 to 20% range, that's probably the right way to think about it in a lot of industries. So it varies by segment, by location. I mean, if you're getting solar and storage in a new state in the US, as an example, it takes a little longer to permitting. California's faster, particularly with the wildfires and the issues they've had here with the grid. So there's a lot of focus on really accelerating that process.
And now when you guys are either starting a new project or taking over an existing project as the new software provider, what do the contracts look like? I mean, are these 5-year, 10-year, 20-year contracts? I assume it's very sticky, but just exactly how sticky?
You know, that's one of the best parts, I think, of our story is we have these 10 to 20-year effectively SaaS enterprise SaaS model, recurring revenue streams, and a typical company would be anywhere from 1 to 3 years. It's a SaaS software. So you've got these very long dated, very clear revenue visibility on all these contracts. So, and by the way, we also see the ability to take and add more apps to that. So in Ontario, where maybe we started with 2 value cases, we're now at 3, 4, and 5. So it's a super compelling model on the software side. We think it's one of the best stories that we have out there.
Do you think you guys will do any M&A?
You know, I think, look, the balance sheet, the stock performance provides us an opportunity. As you can imagine, Jonah, every banker on the planet's happy to give us a call and help us spend $500 million the way they see fit. But we want to be smart about it. Our view is software is the focus. If we can find some tuck-in acquisitions that accelerate our roadmap, we'll definitely pull the trigger.
Cool. And one of the things I like about this story, not only because this renewable energy storage market is growing so quickly, you have the 20-year contract, software margins, et cetera, but you guys are also expected to be EBITDA positive next year, correct?
That's right.
So this is not a cash burning machine by any stretch of the imagination. I mean, I like that you guys are focused on being profitable in the near term.
Yeah, big focus. I mean, I think the only thing that would push that out is if new markets open and we spend more money on the hiring piece. And look, the amount of talent that's calling us to come join the company is exceptional. We're getting incredible data scientists, software developers. So we're excited. I mean, it's an incredible team that got us here clearly, and it's I saw this when I was at First Solar. As we continue to double that market cap, triple that market cap, more and more people called, and it's the same phenomenon here. Is
it hard to find talent right now?
I think it depends on what function, but in general, it's a pretty tight market. Certainly the software pieces, particularly here in the San Francisco area, as you'd imagine. But I think we bring a lot to the table, a lot of focus on diversity and inclusion. And so I think we're pretty front end, and Glassdoor and all those type places rate us very highly. So it's a great place to work, great culture, and that's I think that helps us.
Awesome. Well, that wraps it up for my questions. Did I leave anything out? Anything else you want to comment on?
No, look, I really appreciate the time, and I think we've hit on most of it. It's a great story. Best days are ahead, and I look forward to catching up with you again in the near future. And as we talk about acquisitions, great results, and whatever else is on your mind. But congratulations on the show. I've listened to a bunch of them, and it's a great platform. So thanks very much for having us.
You're very welcome. I appreciate you taking the time, John. Come back anytime.
Talk to you soon. Thanks, John. Bye now.
You got it. Bye-bye.